Good evening. Welcome to another trading recap. This is my worst red week since I started live streaming. Now I'm going to get into the P&L and my thoughts about the whys and what my plans are going forward for next week. I did sit down this morning and do an extensive review of the past couple of months. So I have some thoughts on that. But first I need to do my trading recap from yesterday. I wasn't able to get to it because I was a bit busy yesterday. So let's get to that right away. So we're going to open up the VOD from August 21st here. So yesterday we pretty much waited all day and didn't take any trades, except until the very end where I took an experimental trade for something that I'm learning, and I'm going to talk more about that. But the first opportunity for the day was actually June's. June's popped up at 7:21. It had 7 a.m. news, a biotech stock. It was a patent update. And there's actually a decent opportunity right here for the breakthrough high of day at 7:30. We curled back up and broke that 7:30 level, and the stock just exploded all the way up to $10, which was pretty insane. I should have taken this 10-second micro pullback, but there was something lingering in the back of my mind that someone had said in one of my YouTube comments that I'm always buying near resistance. And that is true in a way. And I needed this weekend to sit down and think about it more. But I had that comment swirling in the back of my mind, and I didn't take this 10-second micro pullback because we're right near high of day, and we've been having a lot of rejections near high of day. However, I do think that this was a good opportunity to buy, to expect the break for high of day. Pops all the way at 10. We don't take any trades on it. At this point, I feel like it's really extended because of how big of a move it made. And I'm drawing some trend lines because I'm trying to learn where to buy for trend line breaks. But I don't take any trades. Shook P also was moving around somewhat during the day. I think it moved around a bit earlier here around stream start, didn't it? Oh, I can't see. But it was moving around a little bit during the day. Didn't really take any, wasn't really interested in it. Didn't take any trades on it. Ended up selling off. It was a Hong Kong company. It had some news, but it was just Regain's NASDAQ compliance news, which is a pretty poor headline to be moving on. And since we've been having a lot of false breaks near high of day, I didn't want to touch it on Friday, considering how much I had lost previously in the week. Now, right here towards the end of the day, I decided to take one trade on June's because I'm trying to learn these trend break patterns, and I see some ascending support here and some descending resistance. So I'm thinking that maybe I could buy for the wedge break somewhere around here. We have 7 seconds left on this 5-minute candle, and so I'm just watching it to see if maybe this is going to curl back up to high of day. Right here, I'm watching June's because it's forming a doji on the 5-minute right below that descending resistance line. And we're also doing an ABCD pattern right below this pivot of 879. So I was thinking that if we break 879 with this ABCD pattern and this doji candle, or this 5-minute candle either finishes forming as a doji or it's a candle over candle, then we could get a squeeze back up to the highs. That was my thinking on it. Right up here, we reject and come back down. But suddenly there's a surge of buying in green on the tape there as we reject and then come back up from 865. I'll replay it again. 865, green on the tape, and then it surges all the way up to 890. If I take a position on this ABCD pattern, and the 5-minute candle closing as a nice green hammer, breaking that descending resistance trend line, I was thinking that we could get a surge back up to high of day. Higher volume buying than selling on the 1-minute. However, it fails to break 9 and ends up stopping me out. That's my last trade and only trade for the day. I have to run to work, so I don't stick around for market open. And that puts us at negative 14 to end the day. Back in the trader view here, we had all 5 red days for the week, which is really bad. $196 red week. We had 2 green weeks going with a green month, and we tossed it all away in 1 week. So that's probably my biggest red week that I've had since I started live streaming. In July, we had a $90 red week, not as big, only half as big. June, they were all smaller red weeks. May, once again, we had a bigger one in at the end of May, but I think this was um, probably back in the simulator back then. Yeah, same with April. I think April and May were back in the simulator. So I mean, there were some bigger red weeks, but this is probably my biggest red week in my live account since I started live streaming. Now the question is why? Why, right? Like we had 2 green weeks and then we had a third green week at the end of July. So we actually had a pretty decent streak going there. We had that really bad week due to my psychology back on July 20th, where I was minus $90 in the red with a 0% accuracy in this week. But I had 2 no trade days, so it wasn't a full red week. It was 2 no trade days and then 0% accuracy because I was hesitating on getting into a lot of the good movers. So what happened this week? Well, when I did my review and I sat down this morning and I went through and I tagged all of my trades by where I got in, the context of the entry, where I entered, and whether it had news or not, and generally like what sort of pattern I was trading, I noticed that a lot of my red days are curling patterns. And this is something that I noticed back when I traded in the simulator a long time ago, is that I am not good at trading curling patterns. And I think the reason for that is probably because I generally don't pay attention to trend. The only thing that I trade when I trade curling patterns is I trade the breaks of pivot levels when there's a surge of volume and MACD is positive. And I seem to be getting in a lot of false breakouts whenever I trade curling patterns, especially because curling patterns are very choppy. And most of my money on my winning trades have come from fresh setups. So I'll have a couple of goals for the upcoming weeks. First of all, I'm going to be prioritizing mainly stocks that are making fresh moves with or without news, preferring news, of course, but not entirely ignoring the fact that we have had this Chinese, no news Chinese stock theme going on, and some of these stocks are making big moves anyways. But the move should generally be fresh, ideally before MACD crosses over for the first time. Or if MACD does cross over, then maybe, the first couple of 5-minute pullbacks, if they're continuing to hold up. Those seem to be the setups that I do the best with. However, I don't want to discard curling patterns because curling patterns are something that I'll need to trade in the future as a setup. I think I'm just really bad at trading curling patterns right now because I'm ignoring some important things about them. Just as a quick example, this is IPST for Monday. Sometimes when you draw trend lines, the breakouts start becoming obvious. You have a descending resistance trend line on these topping tails and an ascending resistance or ascending support trend line coming up. And once you have the candle filling the wedge and it holds, sometimes if you break the pivot level as well, you can have these really big squeezes. Sometimes they don't always squeeze like that. Sometimes they pop up, retest, and then squeeze. But the wedge and the sort of trend is going to be something that I'm going to have to watch going forward. Here's another very obvious example on August 13th on FGI. We had a high and a descending resistance trend line and some ascending support, creating this sort of wedge, forming the breakout. On the 5-minute, we break out of that descending resistance trend line, retest it, and as we retest it and come back up, we start pulling away. Very obvious in hindsight when you draw some of these trend lines, and you can see at the point at which traders start becoming interested. Here's another example from August 12th. We had some ascending resistance become support as the stock held up. We have this descending resistance trend line formed from that pivot at 8:14 a.m. And around 8:30, we have the 5-minute candle fill the wedge, and we break through it, retest, and then move higher. So those are some examples of things that I'm going to be looking to watch as I'm learning how to trade curling patterns properly and buy down closer to support near the 9 EMA instead of buying extended and getting in on false breakouts on curling patterns. But I think that's going to be it for me. If you guys have any comments, suggestions, or opinions about my trading, feel free to leave them in the comments below. I always read the comments, so be sure to give me a shout out if you have any ideas. But I'll be back at it again on Monday, trading 7 a.m. Eastern Time as per usual. Until then, take care, stay green, and I'll see you next time.